The market is in a very complicated moment right now. If you look at historical indicators of value, so if you look at Shiller as an indication of value, it's peaking. If you look at the Buffett index, it's peaking. So there are things that when you look at it, look like all-time highs. And the problem with that is you would say, oh man, but there's this weird dispersion happening in the market. Dispersion means literally a few companies are hitting all-time highs. I think it's like 8 or 9, and everybody else is not. So it's a really complicated moment. It's hard to understand what's going on.
There are moments in markets where everything looks bullish, but nothing actually feels right. We are right in the middle of one of those moments. Just hours after Iran announced that the Strait of Hormuz was fully reopened as part of a temporary ceasefire, oil prices collapsed over 10%, Bitcoin ripped back towards $78,000, and risk assets exploded across the board. On the surface, it looked like relief. A clean narrative, war cooling down, markets pricing in peace. But look closer, and the timing starts to fall apart. Because just minutes before that announcement went public, someone placed a $760 million short on oil, a massive, perfectly timed bet that oil would crash, before the world even knew why it would. At the same time, reports show aggressive Bitcoin accumulation, millions of dollars flowing in within minutes, just ahead of the news. So the question becomes, is this really a market reacting to information, or a market being positioned before the information ever arrives? And that's exactly what billionaire investor Chamath Palihapitiya is warning us about in his latest analysis. According to the billionaire investor, this market is no longer straightforward, no longer rational, and increasingly driven by signals that completely contradict each other. Because while headlines scream bullish, the underlying data is flashing something very different. A market where everything looks strong, until you realize it's only being held up by a few key players. And when you combine that with perfectly timed trades, geopolitical theater, and sudden narrative shifts, you start to see a much more uncomfortable possibility that what we're watching isn't a natural market cycle, but a carefully managed one. And in today's video, we're going to break all of that down. What really happened behind the Strait of Hormuz announcement. Why some traders may have known before the public did. Why Iran is already signaling this conflict might not be over. And why many experts believe this ceasefire is just a pause, not an ending. While also dive into what this means for crypto, the growing concerns around market manipulation, and a crucial update on the long-awaited Clarity Act that could decide the next phase of institutional money entering this space. If you're trying to understand where this market is actually heading, not just what the headlines are telling you, this is one you need to watch closely. Make sure to like the video, subscribe to the channel, and turn on post notifications so you don't miss what comes next. Thanks for tuning in and enjoy the video.
Yeah, I mean, I'll just do it again, but I think the Shiller PE, Nick, I sent it to you, shows near all-time highs. Then the second is the Buffett index, which is the sum of all U.S. equities divided by GDP, is also at all-time highs. So this would generally mean that you need to be increasingly a little bit more risk-off. But then the opposite side of that, and I sent you a third one, and this is why it's so confounding, is you have signals showing everything, which typically doesn't happen. And this is this dispersion point where when you see this performance and it's up 5% in the first, half of April, typically the market is up almost 32% on average for the rest of the year. And we were already up, as Zach said, 7.5% already.
I'm trying to read this graph. This is crazy. I don't even know what's going on here.
This is just a dispersion. But the idea of all of this is, I think we're in a moment where you can find a piece of data to underwrite your bias. And I think that's where there's a lot of danger. I don't know. For me personally, I'm generally more risk off right now. And more importantly, I'm waiting for these IPOs so that I can, to be very honest with you, delever and get some chips off the table. I think that it is crucial that the SpaceX IPO get done ASAP. And then I think it's even more crucial that one of Anthropic and OpenAI front run the other one and get out first.
Look, I think it's pretty straightforward, which is that in the wake of the meeting in Islamabad, that the market is feeling confident and pricing in that the war is going to get resolved. The president also recently said that it's very close to being wrapped up. The military objectives are close to being achieved, and he's made it sound like it's going to be resolved. Yes, a deal was not signed in Islamabad. I always thought that was an unrealistic expectation, that these two countries, which are at war with each other and in fact have had hostile relations for almost 50 years, are going to resolve all their differences in 24 hours. It's not realistic. But the impression that the market, I think, has, and clearly is trading on this, is that that war is going to be what Donald Trump said, which is an excursion and something that is on its way to being resolved, that they've made progress. And J-Cal, you're right. The whole week has just been incredibly strong. I think by Tuesday, the market had recovered all of its losses since the start of the war. I think it made a new high yesterday on Wednesday, and it's making new highs, fresh highs today on Thursday. So you just have to say that at the present time, the market thinks, and I would consider the stock market to be the ultimate prediction market, that this war is on its way to being resolved.
The $760 million oil short placed just 20 minutes before the announcement wasn't an isolated incident. In fact, it was the third time in recent weeks that massive positions were taken right before major geopolitical developments. On March 23rd, a $500 million short hit the market minutes before a delay in U.S. strikes on Iran was announced. On April 7th, another $950 million position appeared just hours before a ceasefire headline. And now, again, perfect timing. 3 trades, over $2.2 billion, all placed just before market-moving news. Regulators have now stepped in, with the Commodity Futures Trading Commission launching an investigation into whether certain players had access to non-public information. And if that's true, it completely changes how you interpret this market, because suddenly, price action isn't just reacting to news, it's anticipating it. Or worse, being positioned around it by those who already know what's coming. And this is where things get even more interesting for crypto, because while oil was being aggressively shorted, Bitcoin was being aggressively accumulated. Large-scale buyers, including major institutions, have been stepping in heavily during moments of uncertainty like this. And if you look at the pattern over the past year, it's hard to ignore. Accumulation during fear, rallies driven by headlines, and then distribution once retail starts chasing price. It's a cycle that many Bitcoin investors now believe is being engineered, at least in part, by some of the biggest players in the space, most notably BlackRock and Binance. Now, while markets are trying to make sense of all this short-term chaos, there's a much bigger force building in the background, one that could ultimately matter far more than any single headline or trade. And that's liquidity. Here's James Lavish explaining why the next phase of this market may already be locked in. Before we proceed, a quick word from our sponsors. If you're holding crypto right now and it's just sitting there, platforms like FortisX are letting users actually earn on those assets instead of leaving them idle. It's something more people are starting to pay attention to, especially in uncertain markets like this. I've left a link in the description if you want to check it out.
Now, I think that much like Lynn Alden, there's nothing really that stops this train, meaning the fiscal spending, the fiscal dominance that we're running here in the United States, especially, and then there, the vast majority of fiat-based currencies, those central banks they're dealing with this fiscal dominance where we're running deficits. Our deficits are massive; they're $2 trillion plus. If Trump gets his way, there'll be $2.5 trillion just with the added spending on defense this year. If interest rates stay high, then that $1.2 trillion that we're spending on interest on the debt goes to 1.5, eventually goes to 2 trillion. As the older bonds mature and are re-rated at a higher yield, it just means that the government has to pay more to borrow that money. And because we're operating on deficits, we have to keep borrowing. So again, that's where we're headed. So what happens to stocks and bonds? Well, I believe that ultimately, Kyle, there's no choice but the government to continue to add liquidity to the base. We have to continue to add liquidity to the system in order to keep it going, make sure that there is no disruption or dysfunction in particularly in the fixed income markets and in the bond markets, particularly in the treasury markets, which is why you've seen what I like to call QE light, which is the Fed coming in and injecting liquidity into the system every single week by buying short-term treasuries. buying T-bills. What are they doing? They're adding balances to the banks. The banks need high enough balances to keep enough liquidity to keep the system going. You've got this velocity of capital they've got to keep up with, and it's measured as a percentage of GDP. And so, if it gets low enough, they start adding more capital. They're starting to pull back where they were. They were adding, I think, $40 billion a month. Now they're adding a little bit less than that now. But that's a complete turn from taking 25, 40, 50, 60 billion dollars a month out of the system prior to this. So they're adding already. They're going to continue adding. It's just a question of where and what kind of acronyms they use. And so that just keeps the system going. It keeps stocks going. And, it keeps assets like gold and Bitcoin. It keeps them from collapsing, meaning what they're doing is they're just reflecting. It's like a mirror. Long term, it's a mirror of the expansion of the money supply. The money supply expands and the prices of things like gold and Bitcoin go up. And obviously houses, real estate, stocks, any asset goes up. And so that's where we're headed. It's just a question of the path that we get there. And like you just pointed out, if we do have some sort of market shock, whether it's because of fears over AI, whether it's fears over quantum computing, whether it's some sort of conflict that we are not expecting, some sort of black swan or a credit event that is out of left field that creates a correlation to one event in the markets, everything will draw down. Stocks, bonds, gold, silver, Bitcoin, everything. But much like 2020, I think that would be a short-lived sell-off because of everything I just described with the problem with the debt that we have. And we've got to keep the system going. And the way to do it is to bring out the fire hose of liquidity and splash it on the markets again, just like they did in 2020, April of 2020 into 2021 and 2022. So that's what I expect. Either way, either we have a constant flow of liquidity, or we have an event that creates the need for a bazooka of it. So either way, long term, that's why I'm so bullish on Bitcoin.
So number one is Bitcoin all-time highs before end of 2026. Yes or no?
All-time highs before end of 2026. Oof. I want to say maybe because I think it's going to be marching towards it. Whether or not crest it, I don't know, but it is going to be marching toward it for sure.
The Fed cuts rates before the end of 2026. If yes, how much by the end of 2026?
I want to say they're going to cut 25 to 50 basis points before the end of 2026.
Okay. You think that's enough to kind of move the needle?
It's the right direction. Yeah, I do. I think it's the signal that matters.
Yeah.
It's which path are we on? And if it's the path for more liquidity, that's good.
Yeah. U.S. Strategic Bitcoin Reserve. Are we actually going to purchase anything within the next 12 months, or has it just been theater?
I think it's been a lot of theater. And no, I don't think we will, unfortunately.
Unfortunately, yeah. Next big company to announce a Bitcoin treasury strategy. We think it's going to be one of the Mag 7s or someone that no one really expects.
Yeah, no, they're not ready to. There's no incentive for the Mag 7s to do it. No, I do expect though that there will be a name that comes up before the end of this year that would be surprising to people. I have no idea what it would be, but I do expect that.
What Lavish is pointing to is something much bigger than geopolitics, insider trades, or short-term market moves. It's the simple reality that the system itself is running on expanding liquidity, and it can't function without it. Rising deficits, exploding interest payments, structural dependence on borrowing. At some point, the only solution becomes more money entering the system. And historically, that has always found its way into assets like Bitcoin. But there's one major piece still missing before that next wave of capital fully arrives. Regulatory clarity. Right now, the Clarity Act, arguably the most important crypto market structure bill in years, is dangerously close to being delayed again. Key issues have been narrowed down, and insiders say it could unlock a wave of institutional capital waiting on the sidelines. But behind the scenes, tensions are still building, particularly around stablecoin yield regulations. And if this bill doesn't make it through the Senate in time, it could be pushed all the way back to 2027, which will mean a complete reset of the timeline for institutional adoption. So when you zoom out, you start to see the full picture. Short term, the market is being driven by headlines, geopolitics, and potentially well-timed positioning by insiders. But long term, it's still about liquidity and whether the system continues to expand. Because if it does, Bitcoin doesn't need perfect conditions. It just needs the same thing it's always needed: more money entering the system. And that's the part of the story that hasn't changed. If you found this breakdown valuable, let me know your thoughts in the comments, especially on the insider trading angle and where you think Bitcoin goes from here. Who exactly do you think is behind this constant manipulation of the crypto market, and when does it all end? Let's know your thoughts in the comments section. Don't forget to like the video, subscribe to the channel, and turn on notifications so you don't miss the next update. Thanks for watching.